Hello and welcome to the Sand2 Pirls Market Commentary, Market Week ending Friday, July 26, 2013. Market breadth. With this past week's market rise, our bull-bear point and figure ratio rose from 2.06 to 2.10, advancing further back into bullish territory. The total count of securities in bullish or bearish patterns decreased 2% to 2,169. The count of bearish stocks decreased 3%, while the count of stocks in bullish patterns decreased 1%. The Sand2 Pirls P&F Market Breadth Summary Chart shows us a market now 3 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Sign Up. There is available a free 2-week trial period for those who are interested. The well-known market breadth indicator, the NASDAQ McClellan Summation Index, rose 74 points for the fourth rise in 9 weeks. At a positive 790.60 points, it continues above the May 2013 top, the March 2013 top, the September 2012 top, the February 2012 top, the January 2011 top, the November 2010 top, the September 2012 top, the November 2011 top, the August 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the May 2012 bottom, and the November 2012 bottom. For the second consecutive week, the weekly NASI is the highest it has been in 3 years. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 3 accumulation days and 3 distribution days. Of the other indexes, both the S&P 500 Deposit Receipts and the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in accumulation mode. Momentum. On Tuesday, July 9th, the CCI 20 Daily had 6 consecutive days above zero for a change in Woody's trend. Now at 63.07, it continues outside the range for a valid zero-line reject. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the NASDAQ Composite Index began a Woody's uptrend 24 weeks ago, while the daily CCI 20 began a Woody's uptrend 2 weeks ago. The CCI 20 weekly got a valid zero-line reject signal for Monday, July 8th open. This week, the CCI 20 continued above plus 100, declining slightly. We will continue to follow the results of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all the bottom 5 are negative. Bullish, Networkers continues in the top 5. Oil Services has entered the bottom 5. Brokers and S&P Retail have left the bottom 5. Bearish, Gold and Silver continues to lead the top 5. Disk drives and semis have entered the bottom 5. Comp Tech continues in the bottom 5. Internet has left the top 5. Focus this week, Gold and the Endgame, Inflationary Deflation by Paul Malcreast's Thunder Road Report from Monument Securities, reposted by Tyler Durden at www.zerohedge.com. From the article, quote, "A new basket currency is likely to replace the dollar as the world's reserve currency. The inflationary-deflation paradox refers to the coming rise in the price of almost everything in conventional money and simultaneous fall in terms of gold. Not only has the backwardation remained in gold, but it has escalated. The backwardation in gold effectively spread from the futures market to the lending market in London when GOFO went negative on 8th of July 2013. GOFO is the interest rate to borrow dollars using gold as collateral. If you are a gold holder, a negative GOFO means that the market is prepared to lend you dollars and pay interest in return for use of your gold for the duration of the loan. As with backwardation in futures, it implies that there is stress in the system with regard to the availability of physical gold, in this case 400-ounce London Good Delivery bars on the LBMA. This is only the fourth occasion since 1999 when GOFO has been negative. On the other three occasions, the negative rates lasted 2 days and coincided closely with lows in the gold price. We've been shouting from the rooftops since 2006 and 7 that the gold market is a gigantic fractional reserve system consisting of a vast quantity of paper claims to gold bullion and a much smaller inventory of actual bullion. Are the banks finally getting ready to squeeze the funds, or are they preparing for another big raid? We hope the latter, given that the apparent depletion of gold inventory in the vaults continues. Below is the data for COMEX registered vaults. And you can see the chart on the website, end quote, by the way. So we thank you for joining us for this week's Sand to Pearls market commentary. We hope that you are having a great weekend, that you have a fabulous week coming up, and we wish you happy trading.